All right, good morning, everyone. Let's get going. All right. U.S. markets up and down quite significantly yesterday, and pretty much stayed down there. We had from the initial sell-off, I think in the first 30 to 40 minutes, we kind of trended sideways around those levels. You can see every sector down on the day except for information technology index, which managed to hold up, which is surprising on the back of Cisco's numbers and the fact that they're going to cut 5% of their workforce and some of their comments going forward. We had weekly jobless claims, which I think actually, the markets were already weak when the weekly jobless claims number came out. I think that ended up being a bit of a catalyst to just support weakness because people are starting to maybe fully price in tapering now, and there was kind of a bit of a knock-on effect from certain asset classes and sectors that I think started to weigh on the market a little bit because of that. You can see here in Asia, we're pretty much down across the board. We had some really interesting action. We did get a bounce out of a lot of the Asian indexes, and some of the things were in the green. I think Hong Kong was up about 0.75%. A lot of the markets were a little bit higher than this at a point. For some reason, Shanghai spiked to over 7% at one stage intraday, and there's, no one really knows why. Everyone's talking about it this morning. Some people are saying it's a finger fault. Some people are saying that it had something to do with big options in the market. But I mean, I don't know that I believe any of that. I don't. It's really quite unexplained, and that's quite an interesting story of the day, I think. But we'll continue to monitor that going forward. No earnings out today, but we've got a couple stocks at ex-div on the 19th. So on Monday, we've got BTI and Mondi that are going ex-div on Monday. So today's the last day to trade them. Just keep that in mind today. The market data out today, quite light. We have CPI out of Europe at 11 o'clock. Then we've got housing starts, building permits, and University of Michigan consumer confidence numbers out in the States. All right. Okay, let's jump into the maps. All right, the first thing, what I wanted to focus on a little bit more today is just the fact that, yesterday I think is a little bit of a shift in markets because of, so many big levels and important things were triggered yesterday. Obviously, the jobless claims number was a very good number. Because of that, we'll have a look at the first impact, and to me the most important impact of the day, and that's right there, and that's the U.S. 10-year. That is the yield. We're not looking at the bond price, we're looking at the yield, and you can see there we spiked above previous closing levels, and really just quite a solid move higher on the yields. This is really important because last time, remember when we saw this sort of move out of Treasury prices. Let's date that out real quick and just have a look from the 14th of June, onward. Let's just have a quick look at the S&P, and let's see what the 14th of June is. You see about where that is. So that's about where Treasury prices started to spike. We were trading up around 1630, 1640. I think we got as high as 1650 a day later, and then within a week and a half, we were all the way down at 15. We traded all the way down to 1560. So I don't think that that's a coincidence. I think that was very much a knock-on effect of these higher bond price or higher yields on U.S. Treasuries, and I'm concerned that we could see that same sort of effect again. I think it's at least something to pay attention to here. So let's continue to monitor this closely. If bond yields do continue to spike, if we get another update today, I think we could have more pressure on some of the global indexes. Let's have a look at the S&P itself. and just shorten it up. We talked about this yesterday, this head and shoulder setup, and the fact that if we drop the level here around 16, call it 1676 to 1680, wherever you want to put this level, but we really you can see the head and shoulder that was setting up basically right there. Quite a nice little head and shoulder setup. Unfortunately, the height of this head and shoulder is not all that drastic. So really what we're looking for here is about a 30-point move from a drop of this level, which probably only takes us down to maybe 1650 at the most. In terms of that technical move, not to say that we can't go lower, but that's really what the projected target is there. So, yesterday's close, not all that far away from the target of that little breakdown of the head and shoulders. Obviously, I think there's potentially for this thing to come lower, but that's a whole other thing. Let's look at the gold price. Another big move that we saw that happened yesterday. This is one that we talked about the other day. We know that 1350 really is literally that's as clear of a level as you'll ever get in any sort of chart. 1350, we breached that yesterday, and what's so interesting is we made that move with U.S. Treasury yields going higher, which is incredibly interesting to me. There are a lot of mixed signals that are going around in this market at the moment. You also got commodity prices and things like that have pushed higher on these numbers, which to me is not typically what should happen. This is really it's really some interesting action that's going on here, and I think we'll have to continue to keep an eye on that going forward and see where it takes us. All right, Shanghai. I'm just going to show this. I want to show intraday chart in Shanghai. You can see that's pretty impressive, that right there. You pretty much in, let's call it 11:04 to what time is that? 11:06. We got a 7% bounce in the Shanghai market, which is incredible to say the least. So, I don't know what else to say about that besides the fact that, if that is that finger trouble, what is that? I do think it lent a little bit of support to local markets. The fact that market is now flat on the day, obviously it's probably some sort of a mistake, but interesting nonetheless. Let's continue to. We'll have to keep an eye on that and see if there's any news that comes out of that going forward. But that's something that I think did buoy markets a little bit intraday here in Asia, and so you got to remember that maybe some of those markets did catch a bit of an artificial bounce just because of some of the algos that would have taken it up in conjunction. All right. I'm not going to look at too many individual tickers today. Like I said, we're going to focus more on the main plays, on the big picture. But you can see here that ABSA really did break down. Barclays Group Africa really has broken down below support. It closed. It was the first real close below support. I mean, if you're taking it from closing prices, then you could have said that we've broken down as of 4 or 5 days ago. But this is a little bit more clear, a little bit more definitive to me, especially when you're working it from the wicks. And I think that this thing has a quite a reasonable target. A reasonably lower target. So we kind of broke down out of this little wedge pattern here, and I don't see any reason why this thing can't fall $10 from coming out of that pattern. So watch that one closely. I know it's got a divvy coming in, I think 2 weeks from today. So watch that one over the next couple of sessions. I think it could shed a little bit. All right, let's look at Bidvest here. Bidvest really has been in a bit of a sideways channel now for better part of a month, and this really, it's starting to narrow down a little bit here. We've seen a couple of these like your rim grows and a couple of these. I like these plays because usually the longer that it kind of consolidates, when it finally does break out, the breakout is to me a little bit more believable. So watch this here. The downside target on Bidvest here, I would say it has to drop 242 for it to break to the downside. On the upside, I would say it's got to be above 249. So. All right, we'll look at MediClinic. Yesterday was added to the MSCI index yesterday, which took us up. You can see that monster wick up, and we actually ended up closing below where we opened. But nevertheless, we've broken out here. Whichever way that you look at it, we have broken out. On MediClinic, I think that we can potentially move, reasonably higher, at least $3 or $4 higher. I don't know if we probably want to look at it like sort of a longer-term flag that we've kind of made, and we've finally gotten a breakout. So I'd like to actually see it get back above 72 and hold 72. I feel a little bit better about it just because the previous closing highs were at 72, and we didn't close above that yesterday. So just watch that. Before you'd enter a trade like that, I'll probably wait to see that it's established itself a little bit above 72, because there will be a lot of meat on this bone if it does hold 72. All right, the last one I want to show is actually out of the States, and that is Mickey D's, baby. Look at McDonald's. And you can see here really made a really nice breakdown from kind of a triple bottom, and really just kind of been grinding down toward the support level here at around 96.40. And we've dropped that. We actually dropped it the day. We dropped it on Wednesday's session in the States, but we got kind of confirmation of that yesterday, and below some of these other wicks here down to 96. So I would say this thing's got a hell of a nice target, lower, probably as much as $5 or $6. So keep an eye on Mickey D's in the next few sessions. That's it, guys. Thanks a lot.